Mary, go ahead and sit, please.
Sure. Hey, everybody, it's Eric Peltier and Dan Spiegler and Doug Ramsey. And we are here recording the first live video of the Colorado Mortgage Insider. And our goal is to educate every 2 weeks about mortgage stuff. Wherever this video ends up, our pertinent contact information should be right down there below. And feel free to share this video with, I don't know, wherever you feel appropriate. Today, for our first video, we're going to be tackling a relevant topic, myths of refinancing. And I get the pleasure of starting out with, is refinancing costly? So I'm going to start in on that. So thank you, guys. First of all, is refinancing costly? The short answer is it's not really. For the states that we do most of our loans, Colorado and California, it's kind of the Wild West, and closing costs are quite low. We don't have state taxes or lawyer fees that drive up the costs, and there's a lot of healthy competition. So it keeps it quite low. So getting into some numbers, with no points, the typical refinance transaction closing costs are about $2,600. In the case where we need to, or we're allowed to, waive an appraisal, that figure can drop to $2,000. When can we waive an appraisal? That's when automated underwriting with Fannie and Freddie allow us to do that, or some VA refinances. But we're going to stick with the $2,600 closing cost figure for today's arguments. So if you did have closing costs of $2,600, and I'm supposed to be writing here, $2,600, and your closing costs were, closing costs were $2,600, and it saved you $100 a month. Kind of doing this wrong here, aren't I? And Dan wanted me to write at the top, and I completely failed Dan. So you've got not a return on base investment, a break-even point of 26 months. Not bad. Not bad for break-even. And so, if that's all it costs you, and it breaks even within 26 months, that's pretty good. Then after the 26th month, you're saving $100 a month for whatever the rest of your 30-year term is. Let's just call that 330 months, roughly 334. And so I don't know what that's about $34,000 in savings over the life of the loan. So I don't think it's all that costly to do a refinance. Next up is Dan, and he's going to talk about, do you really need a 1% interest rate drop to make a refinance worth it? You've got the talking pen now.
I'm calling this the baton. Eric's just passed the baton to me. That is a big myth that's out there. You've probably heard from your parents, grandparents, whomever, oh, if you don't save 1% or half a point or $300 a month, whatever it is, it's not worth it. Definitely not worth it. I'm going to show you how that's completely off the mark, and what you want to focus on is your break even and what it costs you, and of course what your savings is, not to mention savings over time. So first thing to understand is that when Eric said rate without costs, refinance without points rather, you can get virtually any rate you want at any time you want if you're willing to pay for it. A lower rate obviously is more expensive. Where the baseline is no points, just depends on where the market's at. So you want to catch the market at a good time, and you want to make the best use of your money. So in Eric's example, we saved $100 a month, cost $2,600, and that's just one way to go about it. Let's say that you started off at a 4.5%, and we're trying to get down to 3.5%, right, to satisfy your parents' 1% rule. Okay, great. Let's say that costs an extra, I'm trying to look at my notes here because I don't have my glasses on, an extra 4,400 points. So that brings your total cost to about $7,000. Now that's going to save you more money than just $100 a month. It's going to save you $200 a month. Pardon my lefty scrawl, I know it's terrible, but that comes out to about a 35-month break even. Now these numbers are rounded off just to make our math easy. It's not exactly $200 a month, but you don't have to worry about that. Let's say you don't have the extra few grand to bring to closing. You don't want to stretch that far. At a slightly lesser rate, about 3/4 of a point savings, you might get about $3,400 in points, which brings you to about $6 grand in savings. Now in cost. Now savings is relatively linear. That comes out to about $150 a month savings, and it gives you about a 40-month break even. Now, let's say none of these really work for you. You really want want to refinance, you want to save some money right now and in the long term, but you're a little shy on cash. You could save even a little less and have a whole lot less cost. Let's say instead of saving a point or 3/4 of a point, you only save 1/4 of a point, which seems like nothing, right? You're supposed to save this 1 point or else don't do it. If you save 1/4 of a point in this scenario, we actually reduce your costs. We give you money towards your closing costs, and your costs are only $1,600. How much is your savings? Well, it's only about $50 a month, and that's got a 20-month break even. So this similar set of choices is always on the menu for you. And you've got to, with our, obviously, we'll give you some guidance here, but you've got to make the decision that's best for you and what's most important. If you just don't have the cash, okay, let's still take the $50 a month savings. If I was your investment advisor and I said, give me $1,600 and I'll pay you $50 a month for as long as you hold the asset, as long as you're going to be in it for more than 20 months, it makes sense. You're going to make money. You may not make as much money as you will make down here, but you don't have to have the large cost up front. So it's a very flexible set of ideas that I don't want you to think about just one set of costs and one target for where you have to make 1% improvement on the rate or it's not worth it. There's other things that go into these questions also, and a big one, of course, is how long the term is for your loan. And that's what Doug's going to talk about for a bit, as to how you can manage that and what impact that makes.
So when we're talking about starting over, really what we're talking about is the concern on how long it's going to take me to pay my loan off over time. Really what we're talking about there, again, is the amortization. The amortization is the part of the loan, basically in layman's terms, that how long is it going to take you at your current payment to pay the principal down on the loan. The easy solution to that is if you've been in a 30-year loan and you've been in it for 5 years, you can simply take a 25-year term and you'll pay it off at the same time that you are now. The downside to taking a shorter term is sometimes the payment can go up, which can sometimes erode some of the other savings. So it really comes down to goals. What is the goal of the refinance that you're doing? So is it to save money each month, which is a real tangible benefit that you have right now, or is it to pay the loan off over time? It can be either way. We can take a look at analysis on a number of things. There's other ways that you can pay your principal back that you can do with on a 30-year term. So we can pay the principal down with additional payments. You can make bi-weekly payments. We can take a look at what the amortization is on your current loan now versus what the amortization is on the new loan. The difference between those two, if you make that as an additional principal payment, that's really the same thing that you're doing on your loan right now. So there are ways that you can do things to advance your principal, just like you're doing now. There's some things that you can focus on going forward to try and make it better. I'm kind of a rubber meets the road kind of guy. So what I would tell you is the average length of time that somebody in a house is how long? The answer is you don't know. You don't know how long you're going to be in that house because it's specific to you and your scenario. So are you going to pass up a real benefit that you have right now for a future unknown event? That's your answer to go. But the fact of the matter is you can save money now. You don't have to worry about what that unknown future event. And the reality is you're not going to be in this house for 30 years anyway. So guys, come on back and let's finish it out.
Oh, sorry.
That's our cue.
Speaking up. Yeah, thanks for watching our first video for the Colorado Mortgage Insider with Dan Spiegler, Doug Ramsey, Eric Peltier. Give us a call if you need a refinance. Our contact information should be down below somewhere. Anything last things to say, guys?
Thanks for watching.
You're not going to be in the house 30 years, so refinance.
Thanks a lot. I can't reach the button. I'll do it on time.